Okay, we are continuing with economic. Rapid economic growth may lead to increased demand for imports. Where there will be rapid economic growth, it means there is a growth of definitely industrialization or manufacturing along with the services. In case there is growth in manufacturing organizations, usually none of the country in the world is manufacturing all kind of raw materials. So they need to purchase raw material or machinery from the different countries. That's why there will be increase in imports, or they will bring machinery or material from other countries who have specialization in particular machineries or materials. Country Y has increasingly high rate of unemployment. Which of the following statement is or are true regarding the effect of this on consumers and business? Businesses may offer lower wages to staff. Government spending on social security will fall. Businesses will find it easier to locate new employees. Businesses may find that demand for their goods and services falls. So country Y has an increasingly high rate of unemployment. Unemployment rate is high. Which of the following statement is correct? First one is businesses may offer lower wages. Definitely where there is high unemployment, businesses will offer lower wages. Number two, government spending on the social security will fall. Government spending in this situation will rise. Businesses will find it easier to locate new employees, and they will make redundant to the previous one because they are expensive for them. Businesses may find that demand for their goods and services fall when people are unemployed and not earning something or less earning lesser amount, that definitely they will reduce their demands as well. So this one is the right answer. This one is the right answer, and the first one is the right answer. Which of the following are typical macroeconomic policy objectives of the government? Macroeconomic policy is relevant with the fiscal policy and monetary policy of the government. Especially it focuses on what? It focuses on discount rate of the country. It focuses on overall number of imports, exports, what surplus cash we have. It is not dealing with the individuals. The economy which is dealing with the individuals or consumers, that is called economics. Macro policy is what? Macro policy is economic growth. Money supply chain management is fall under the fiscal policy, not the not the macroeconomic policy. If money supply is increasing, or for example, central bank of a country is reducing their discount rate or interest rate, it means they are increasing money supply in the market. So money supply rise in the market will ultimately improve the businesses or business environment in the country. And if suppose central bank is going to increase the discount rate or interest rate, it means they are going to reduce the money supply because people will prefer to deposit in the fixed account to earn interest, which will do what? Which will reduce the businesses, or people will not invest in businesses. Which of the following would be which of the following would be best estimate the effect of expansion on a country's economy? Expansion means what? Expansion means economy is expanding. Why? Because government is increasing their spending, or government launched such type of policies which are relevant with the expansionary policy. Expansion effects has no influence on the economic development. If a government is expecting the citizens' income to rise, it will try to adjust the taxation level as to decrease the amount to be allocated to be collected. If a company expects its trade contract to be terminated, it will take actions to find another customers. If people collectively expect the economy to develop in a certain ways, they will act in a manner that will facilitate this change. Which of the following would best summarize the effect of expectations on a country's economy? If people collectively expect that the economy is developing in a certain way, they will act in a manner that will facilitate this change. Means either they will increase their investment or they will prefer to work on those areas. Expectations has no influence on the economic development. No, expectations have influence on the economic development. Government is expecting citizens' income to rise. They will try to adjust the taxation level as to increase the amount to be collected. If a company expects its trade contract to be terminated, it will take action to find another customer. Trade contract is going to be terminated. They will not find only the new customer. They will look for the legal aspects if it is terminating illegally or unethically. What fiscal policy would be best used when trying to address a deflationary gap? What is this deflationary gap? Deflation means what? Deflation means reduction in the prices. Normally, we have inflation where there will be a rise in the prices. So, what is addressing the deflationary gap? Having a deficit budget is deflationary gap. Deficit budget means your expenses are greater than the income collected from taxes. Then you will borrow funds from the banks or the IMF or World Bank to fill this gap. Surplus budget means income is greater than the expenses. Lowering interest rate is nothing to do with this budget. It will increase the money supply. Rising interest rate is decrease the money supply. So it is relevant with the money supply. Increase in unemployment reduces demand, falling household income, and low business confidence and investment are associated most strongly with which of the following? Increase in unemployment. Unemployment is rising, demand is decreasing, falling household income and low business confidence and investment are associated most strongly with which of the followings? High interest rate, increase in the money supply, a budget deficit. This is called what? This is called recession, where unemployment is rising, demand is falling, household income is falling, business confidence is falling, and investment associated with this is falling. If a government has macroeconomic policy, the objective of expanding the overall level of economic activity, which of the following measure would be consistent with such an objective? If a government has macroeconomic policy, objective of expanding the overall level of economic activity, now government is expanding. Government expansion means increase in the public expenditure. When government will incur cost on the public expenditure, it means government is going to allocate budget on the development. Now government will engage different businesses to perform different activities. So it will create economic activity in the country. Which is the uh, following likely to be a result of balance of payment surplus? Balance of payment means we are trying to maintain a balance between receipts from the exports and payments to imports. If it is surplus, surplus means what? We are like having more exports than the imports, or it could be like due to increase in inflation that we have surplus due to inflation. Lower economic growth leads to balance of payment deficit, not the surplus. Unemployment also leads to deficit, and budgeted deficit also leads to deficit. Inflation is the one which can lead this to growth. Which of the following is a disadvantage of economic growth? Growth rates may exceed inflation rates, so it is an advantage. Gap between rich and poor may narrow, again it is an advantage. Growth may exceed population growth, it is an advantage somehow that as long as existing workforce will become redundant, country have a new workforce to manage the operations. Growth may be in demerit goods. Yes, definitely when people have excess money or excess disposable income, they will spend on demerit goods as well. Which of the following statements best describe demand side policies? I believe that government should manipulate its spending so as to manage aggregate demand, ensuring that demand is contained so that inflation is controlled, managing down excessive growth by reducing government borrowing, keeping unemployment levels substantially below full levels. So, what are the demand side policies? A belief that government should manipulate its spending so as to manage aggregate demand. Government is doing what? Manipulate its spending. To do what? To manage the growth. Like government is buying more than the demand just to maintain the economic growth. Country M is experiencing economic stagnation. A senior policy advisor has recently proposed that nation should concentrate on limited government interventions in market and reduce fiscal deficit rather than increasing public expenditure. So he's saying that do not incur more on the development. Now you should focus on the reduction on the fiscal deficit. Which economic theory is the policy advisor suggesting that country M should adapt? So country M is basically adapting the classical economic theory, which says that where there is economic stagnation, in this case, reduction in fiscal budget is needed by reducing the development expenditure. Next one is country F is experiencing a rising in trade deficit. In addition, the cost of these imports are rising. Cost of these imports are rising due to production problems in the countries that export to F. If all else stays constant, which of the following would this be expected to cause? A fall in aggregate demand, rise in aggregate demand, import-input inflation, and money inflation. So rising trade deficit. Trade deficit means what? Imports are greater than the exports, or alternatively we can say like this: imports are greater than exports. Cost of these imports is rising, so it will reduce the overall aggregate demand in the economy, not rising, and imported inflation will also rise. Which of the following would be classified as expenditure reducing strategy? Providing subsidies to exporters, lowering the currency exchange rate, which means devaluation, run into budget surplus, and import tariffs and quotas. And expenditure reducing strategy. Expenditure reducing strategy is the one where we are running our budget in surplus. Government is reducing their development expense and focusing on what? On focusing on the saving. So it will give them surplus budget. Government may need to intervene in the economy in order to move it nearer to its equilibrium point. Increased government expenditure and lower taxes can be used to stimulate demand, and full employment is only possible with a boost from government policy and the public interest. Which approach to economics do this statement relate to? What is the approach? Government expenditure is rising, taxes are falling, used to stimulating demand. Full employment is only possible with boost from the government policy and public investment. It is given by the Keynesian, who thinks that these are the ways which can help the country to boost their economy.